Alrighty, we are recording.
Okay, cool. The reason being is after we're done, if you can either post it on the channel or send it to Don Treader.
Yeah.
Because he wasn't able to make it. I tried to get him in here too, but he doesn't have the time to get in. All right. So basically, I'm just going to go. But Greg asked for the session just to go over how I'm reading Forex for swing trading. Okay. Easel, the reason I put you in here is because basically I'm going to be going over a Forex pair in my top-down review that I do every day to get ready for the market, and then move into how I would trade Oliver's system once I have that in place. And this obviously can be done on any asset. So even though I'm going to go over Forex pair, it's the same for YM. And when I'm done with the pair, if you want me to go over YM, I can do the same thing. But it's basically the same thing on all of them. I did find something, Easel, that I want you to put on your charts. And it is a Lux Algo indicator. And it is called HTF candle consistency. I think this is going to keep you out, may help you stay out of the chop zones. Because we trade now, this gives you up to 10 time frames. This table up on the top right of my chart, it gives you up to 10 time frames, but I haven't gone into the settings yet. I'm sure you can turn off a lot of these. And since we're trading on the 2-minute chart, I would suggest put the 2-minute, the 5-minute, and the 15-minute up. Okay. And this tells you if it's bearish or bullish on those time frames without having to switch back and forth to your higher time frames. You may even want to put the 1 hour up there, okay, and have those 4 time frames up. So basically, how this will keep you out of chop is that all time frames have to be moving in the same direction for you to be looking for an entry on a trade. Okay.
Okay. So you said 2-minute, 5-minute, 15, and 1 hour?
Yeah. Those should be good enough. The 1 hour, sometimes, you might find that maybe just the 2, 5, and the 15 need to be in alignment. So you're going to have to play around with that just a little bit. I'm going to be playing around with it myself.
Did you mess with the weight at all?
What's that?
Did you mess with the weight setting at all?
I have not gone into it at all to look at the settings. I just found it and just saw the quick YouTube short that they put up for it. And I've just kind of been, looking for a way to keep you out of the chop zones, because I think you are now a profitable trader. The only problem is that's keeping you from that profitability that I think you can achieve is not adding anything but taking away things. And your biggest problem is getting caught up in the chop. If we can get rid of those losses, I think your profitability is going to skyrocket. And then you can look at ways to improve from there. Okay. All right. So let me move over to what I've been trading and go over why I've been trading it. Let me take off some stuff that I added today and just go back to what I use. All right. Okay. So before I even start trading, whenever I wake up and get on my charts, I want to see where we're at on multiple time frames so that I can figure out, or try to figure out, where price is going to go and how it's going to get there. So the first thing I'm going to do is I'm going to get on my 4-hour chart. Okay. I don't care about the daily or anything else. 4 hours is basically what I use. Okay. And this is what I saw when I started my account with Oanda for Forex trading. We had this big dip. We came back up and we broke above this range over here. Okay. And then just started ranging again. Now, this is a pretty long, sustained move up that's now gone into consolidation. So I want to pay attention to this consolidation, because from here, I don't know if we're going to continue up or if we're going to come down. But on a 4-hour chart, really doesn't matter, because this big of a consolidation, I can swing trade this. Okay, especially once we get a manipulation move, because that's going to extend the range, and then I'm going to have 2 or 3 days worth of trading to go to the other side of the range if I think it's going to go there. Okay. Now, what I saw was our push above range in this area here, and then a drop back down into range, and a push up that failed to break a swing high but made a double top, and we got the topping tail bar off the SMAs that closed back below the 100 SMA, and then it showed us moving back towards the 200. Okay, but it failed to break the bottom of the range here, and then we got a big bullish bar up. Okay. Now, when I actually opened the account, we had already made this lower high here. Okay, and we had pushed back down. Now, I will use my DTR levels. All right, my quads from Ali Khan. So once we got down here, failed to break the low and got this big bar up, I started doing a dealing range. Okay, so on this 4-hour candle, I would have put it at the high because that's a pullback, and I would have expected this to be my range at the moment. Okay, but the pullback held the 25% and then broke back above, and we started making higher highs again. So I'm waiting for the next pullback. Well, this candle or these candles could have been it, so I probably would have placed it at this high at that point. All right, until this held and pushed back higher, and then I just keep moving it up until we get a pullback that actually starts breaking DTR levels. Okay, and that's what we got here. All right, so I saw this lower high, and if we can't break the high after coming down and sweeping a couple of lows here, but not actually breaking, I noticed that we make a double bottom down here. Okay, and I'll always mark those out when I see them, because that is our sell side liquidity, possible sell side liquidity. Oops, hold on. Put it here. Oh, come on. There we go. All right, there and there. All right. So I know we have sell side liquidity down here, and that is also the bottom of my dealing range, because we swept this low and then we went and swept this high. Okay. And now we have our pullback. So now we have our actual dealing range. Okay. That I'm comfortable in. Well, when I started trading was 4-hour had come down and hit the 50% mark, and then it pushed up and made this lower high again, and we got a topping tail bar back below the and that was right off the 4-hour 20. Okay, now I have changed, I think I've told both of you, I've changed my SMAs to Fibonacci numbers, 23, 38, and 50 for my lower time frame, and I've colored them green, yellow, and red. So go, caution, and stop. All right. And then my higher time frames are the 100 and the 200. So I saw this lower high with the topping tail bar. They got back into the SMAs. And I decided at that point, which also we had inverted this fair value gap here on the 4 hour, and this could not get back above that inverted fair value gap and got slammed down on the 4 hour. Okay. That gives me a good bearish signal. So if we're bearish and we're making lower highs and lower lows, where are we going to go to? Well, where's our liquidity sitting at? This double bottom that also includes all of this consolidations range, right? So if we're going to go higher, we need price to go lower and grab liquidity. Well, that liquidity is either going to be stopped here in this fair value gap, or we're going to go sweep these lows for liquidity run and then go back up, or we've had manipulation and we're just going to slam down. Because of the long 4 hour push that we've had up, we could possibly expect a 7.0 retrace on this 4 hour level if this begins the sell side of the market maker model. Now, for that, if that happens, I want to know possibly where could this go. Well, if we do our fib from the low to the high of that entire swing, well, I need to get my mouse pad. My mouse goes nuts. All right, I'll stop here in just a second. I know, Greg, you're going to understand all this because all this is ICT stuff that you're just getting refreshed on because you've been on lower time frames for quite a while. But if we do a 7.0 retrace, where is that 7.0? My God, that is a beautiful, beautiful spot. Why? The 4 hour fair value gap. What is the 7.0 level compared to the 50% line of that fair value gap?
Smack in the middle.
There you go. All right. Now, that is where I would love to see price go. All right. And that is literally a swing trade that would be amazing. Now, that could be held for probably a full week, if not more. The reason I think we can get down here is if we break this consolidation to the low side, after we've had manipulation up and a high that couldn't break that high.
There's not much.
Now, this is telling me that we should go down there. Well, there's nothing holding us up here.
Yep.
We've got a few fair value gaps here. But this is really good low resistance liquidity, trendline liquidity sitting here. Okay. So I think we could get down here. But the market has to show me that. But for now, I can still take trades based on what I've seen on the 4 hour, because right now my target is back down here at this sell side liquidity. And if we take that out, we should take out the entire consolidation low and either manipulate down or head back up. And the 200 is going to tell us that, because if we get back below the 200 and it holds and we start getting some good strength to the downside, then I'm going to be looking for us to get down here. Okay. And that's a trade. Once we get below the 200 and we start seeing price, that's a trade I can hold for probably a week. Okay. To get down here and close it out. All right. So that's my thoughts on the 4 hour. Anybody got any questions on how I look at the 4 hour? No. Nope. It's just all price action and basic ICT stuff. So now I have my bias. So then I'm going to move down to my 1 hour and I'm going to see where we're at based on the 1 hour. Well, the 1 hour is pretty much confirming what I'm thinking, because we broke back below the 200. We went up to retest it, and then we came down and we got this elephant candle off of the 38 that closed back below the 20. Now, this is why I have these colored the way they are. Okay. Any color change or elephant candle off the green is a go candle. All right. That is, if I'm not in a trade, I'm going to take a trade. When we start to pull back,
repeat that again?
Any color change or elephant bar or topping tail bar off of the 23, which is the green candle or the green SMA. I'm sorry, let me take the 9 off. I put the 9 on because it is the smallest one and will hold us in trend for a bit, but I don't want it on there at the moment. So let's take it off of there. All right, let's take that off. So yeah, any like this right here, we had a push up, then we had an elephant candle and a color change off of the 23 up here and the 200. Okay, that would have been a serious go candle. All right, green means go. So anything off of that 23 in the direction of my higher time frame bias, which is the 4 hour, is a go candle. I'm going to get into that trade somewhere, somehow, some way. Okay. And then once I'm in that trade, we have the go, caution, and stop. Okay. So if we break the 23, I'm okay with that. If we break the 38, now I've got to start being a little worried and pay attention to what's going on. If we close above and the very next candle does not get us back down below like it did here on the 50, okay, we were also at the 200, but if the 200 wasn't there and this was just the 50 in a downtrend, if that very next candle doesn't get us back below the 50 and it starts heading up, I got to get out of the trade because things are changing. Okay. And you can see that even though we're messing around still with the 200 and 100, once these all three get in line, you've got a nice push down. We break here, no problem. We break there. What the hell's going on? We break here. Do I need to get out? No, thank goodness. Okay. No, I can stay in this trade if I'm in a swing trade and wait for the continuation down that breaks us. Okay. I think this is a really good dealing range because you can see how the dealing range quads are being held, being tested, and then broken, tested, back up, holds the 50, comes back down, breaks the 75. Our fair value gaps are right in line with our dealing range. So I think we've got a good sense of what's going on here now. So when I see something like this on the 1 hour, where we're reaching up to the 1 hour 23, and then we get a bar that starts going down where the top and where the closing and opening price of these bars are even. Okay. That's the beginning setup of a bear 180, color change, elephant bar, whatever you.
I was thinking bear 180.
Based.
That's what I was thinking was bear 180 right there.
Right. It's all three.
Yeah.
In one. So that's why I said I would be in that trade 100% one way or another. Once I see this start going, I want to get a little better entry on this push because I don't want to have to risk that whole bar, especially if I'm day trading. All right. So now I'm switching into day trading. Swing trading, I explained where I might have to get out of the trade or not. All right. But swing trading, I would still be in this trade. All right. I will mention before I go to the lower time frame. Actually, no, it is on the lower time frame that I did it. Okay. So now we'll move down to the 15-minute real quick and see what's going on in that 1 hour candle. This was the 15th at 3 a.m. So let's just go back to that for a moment and see what we got. Okay, so 3 a.m. is the London Open. And the London Open immediately starts pushing down. And this candle gives us back into the SMA area, but hasn't cleared it. The very next candle closes down and closes below all the SMAs, short-term SMAs. This is where, on this close, is probably where I want to get into the trade. Okay, so at 3:15, I know this candle is going to be closing before this candle closes. I know this candle is going to be closing, just because of the amount of time left on the candle, below all of my SMAs. And the 100 is already in a down move, and the 200 is flattening out a little at that time. Okay. So paying attention to those higher SMAs, I know this is a downtrend, and I see the 200 starting to flatten and no longer be in an uptrend. So when this candle, right before this candle closes, I want to move to my 2-minute chart, and we'll go back to the 15th at 3 o'clock in the morning. All right. Now, at the open, we get this bar. And then we get our close below the SMAs, somewhere right in this area at the DRT level, 50%. Okay. Now, if I'm looking to go short, because that is my higher time frame bias, I can ignore this bottoming tail bar and this green elephant bar. Okay. Why? Because I'm looking to go short, and we are below all of our SMAs. There's no way I'm going long on the signal. Okay. We get our push up, we get a topping tail bar at the 100 that closes back below my 50% DRT level. That's my entry as soon as we break the low of that candle, which we did on the very next candle. So I'm in the trade right there. All right. And that is on a 2-minute time frame. So I have a very, very tight stop loss, just risking above that bottoming tail bar. And how long do you want to hold the trade? Well, we just went below the 50%. Where could our target be? All right. I know where my target would be the next DRT level, but using your SMAs, any close back above the 40 that doesn't regain the 40 on the very next candle, okay, or the 38. So this one regained, and we came down. Then we came back up, and we pushed down, but we did not close below the 38. This is where I would be out of the trade, right here. Okay. Yes, I'm giving back some unrealized profits by doing that, but do I care? No. Why? I just nailed a 6-to-1 trade. Okay. Now, you could say this here closed above and didn't get back below, but why would I not close the trade there? There is a pretty good reason. We just had a big displacement down that ended in an elephant bar that took this low over here. Could this be a reversal area? Possibly, but what is my higher time frame telling me? That we're going to go lower. Okay. So I'm going to hold through this because we get up in this area, we push back down, and then we do get, let me take that off. Okay, so we do get a sweep of this high right here, and then we immediately fall below and we consolidate some more. But we're never getting up here and breaking these highs. Okay, and my entire thing, trades have to rest after big moves or sweeping liquidity. Well, one of the way that, and Greg, I don't know if you've been able to watch that video on the swing trading for prop firms. One of the ways that he says that a trade will rest, and I've got to start implementing this in my prop firm trading as well, because this happens a lot, and this is where I end up getting out of trades too early until he taught this. Trades can go sideways just waiting for the SMAs to catch up. Okay, and that's all that happened. They caught up. We tried to break above. We still couldn't break above, and then we finally start moving down again. All right, so this was a big problem of mine where I would see this break of the SMAs here, and I would get out of the trade thinking we might be reversing, but all it's doing is resting and waiting for everything to catch up. My higher time frames are still in a downtrend. Okay, there's no reason for me to worry yet. We haven't even gotten close to the 100. Okay, and I got in the trade up here.
He talks about that too.
Right. I got up in the trade up here.
In his video.
So even in this area,
also, did you catch that video?
Still in profit. Which video?
It's space and time video. Basically, if you've got a large push in one direction, you need the time now to catch up.
Right. So, now if we got an elephant bar off of this that broke this, and then we started moving back up, I could close my trade before I went into a negative. Okay. But just letting this consolidate, letting it rest, seeing the SMAs catch up, not really seeing any strength to the upside, I should be willing to hold this trade for the next push down. Because, again, what are you looking for? Basically 3 legs to the downside. So we had the first one that came down. And then we got the pullback, and that's where we entered the trade. The second one here, and then we get our third leg down here. Okay. And that right there, I mean, I wouldn't be out till up here, but right here is giving me a very good indication that we could be reversing off of this third leg. We get a sweep of a double bottom, and we immediately go up and invert 2 fair value gaps. Okay, that's a pretty good reversal signal before you even get through the SMAs. But I don't mind, on a 6-to-1 trade, I don't mind giving back 1 arm and taking it at a 5-to-1. Well, it was probably a 7-to-1. We took it at 6-to-1. Got out at 6-to-1. Okay. So that's how I break down. I want to see what my higher time frames are doing, where they're at in relationship to the SMAs, what kind of signals am I getting on the higher time frames, and then find a spot on that 15-minute chart that gives me a good Oliver system trade, and then move down to my 2-minute to find an entry. Now, at that time, your 2-minute, you're probably going to be missing the first leg like we did here on this trade. But we don't need to find the tops or the bottoms. We just need to get in on that second leg and catch the second and the third leg, and we're good. You've made enough money. So yes, you got a good signal up here with lower highs that cross back below the 200. But at that time, it's relatively flat. And it's a good signal, but it's not what I want to take up here. this is where I've changed a little bit of my trading, where I've been super aggressive. And the reason I take as many losses as I do isn't because I'm trading chop, it's because I'm getting into trades too early. Okay? I know the direction that the price is going to go, but I always end up getting in too early and taking a stop out and getting in again and taking a stop out and getting in again and taking a stop out. And then I catch my trade. But by then I'm having to catch up 3 losses just to make some profit. So where I've changed a bit is I'm waiting for that 15-minute signal, then going down into my 2-minute chart and finding the pullback that allows me to then get into the trade on an Oliver signal, whatever it may be. Right? So that's basically how I break it down. It's very simple. And I will take into account fair value gaps. I didn't even see it here, but if I was live trading, I would be paying attention to it. We had what I call a propulsion gap, the 2 gaps on top of each other. Okay. That first gap a lot of the times gets rebalanced. The second gap is what you get. Well, the first gap down is the one that should hold. The second gap down usually gets rebalanced, right? So it does get rebalanced, and then we hold the 50% mark of this right here. And as long as we don't invert that gap right there, I'm okay staying in the trade. If it did invert that gap here, I would be getting my close above the 40, 38, and it would probably continue on and not get right back down inside. Okay. So as long as I'm holding that gap, we're still bearish. All right. So.
And your primary way of doing this is you're looking at the 4-hour for your direction. You're looking for the 1-hour for any significant signals or like intra-directional thing. But then on the 15-minute chart is where you're looking for your Oliver Valez trigger, like a bear 180 or some kind of a breakout of the 200 with an elephant candle. And then that's where you then drill down to the 2-minute and then find your entry.
Yes.
Okay.
Yeah. And I mean, you got, even on the 15-minute, before you broke below the 50% up here, you've had a good run up. And then you get your topping tail bar, and then that doesn't hold, but immediately after you get your bear 180.
Yeah.
Okay. And then it pulls up. It doesn't hold the 50%, but then you break the low right there. You make a fair value gap and you get back below all your SMAs that are in a tight zone, right? They're not spread out. We're not in a trend anymore.
No, they're real tight and they get ready to break down.
Right. Your narrow state. And then you get a close below that, a push back up that can't hold it. Anywhere in here, you could take a trade. Mine would probably be on the topping tail bar. Right here, as soon as we broke that topping tail bar, because it pushed back up into the SMAs and got rejected. Okay. And this, I don't know if, I know Easel's heard it a couple of times from me. This opposite wick theory, and here it is, it shows up again. You get a big buy wick or bottom tail bar that turns into a top tail bar. The direction of the second wick is usually the direction price is going to go. So these opposite wick bars, I love these trades. because a lot of times, I mean, if the first one was down and the second one was up, I'd be going long. But I love those. So watch out for them and just watch them. Don't trade them. Just watch them. See if I'm right. Okay. Here's one here. Bottom or top wick, bottom wick. Boom. Off we go. Okay. So yeah, I'm looking for a 15-minute signal. Now, also remember that the one signal we don't have, I mean, there's a couple that we don't have for the 2-minute chart on the indicator yet, but also be very, very aware of where you get these signals. So we got an elephant bar here. We also had a topping tail bar right before it. And then we immediately get the bear 180. You don't have to take this trade because you're still above here, but you could literally take this trade when we break this candle's green body to the downside. Why?
Color change.
Color change, not off of anything, but it is a lower high.
Yeah.
We've gotten a bearish signal here, and now we've made a lower high. You could be aggressive and get in right there. Oliver, in one of his videos, he even says it's one of his favorite trades, is the lower high or higher low. Okay. When you're not near the SMAs, you can't get a signal off of the SMAs, but you get something like that where you just swept the highs on liquidity and it pushes up really fast, but then rejects, and you get a small pullback and you start heading back in the way of the rejection, you can take those lower highs and trade them. And if you did that, I mean, Jesus, and that's a 15-minute chart. So, I mean, that's like 5 hours of just straight down movement, if not more. So 5:30 in the morning till noon. Yeah. So
Good deal.
that's how I look at it. That's how I trade it. I've added a few things to my charts on top of all of